Let's hit one more country here. We've hit some good ones, but I think this conversation would not be complete without us at least talking about China. So now the second most populous country in the world. India has surpassed it here recently, which is interesting, but China certainly pulls its weight in affecting the global markets. Controversial one, geopolitical risks, a lot going on in China, but what's your take on the response to the macro right now in China?
So ambiguous. China has been so ambiguous for the last, for always, I guess. But over the last 1.5 months, I want to say they've declared so many policies in support of, consumption, in support of the property market, in support of so many things. Unfortunately, we haven't seen implementation. So they're talking about all these supportive policies, but they seem to be just headlines. We haven't seen tangible, measures being taken to say that, okay, we're cutting these rates, or we're increasing those rates, or we're pumping this amount of money in, or we're doing that. So I think we need to see a little bit more of this. What is not ambiguous about China right now is their growth, right? So their GDP growth has been slashed to, I want to say 5.5% to 6%. Most of the banks are seeing 5.5%. Now, you might tell me, wow, that's still 5.5%. True, but China's had a GDP growth of close to 9% for the last 30 years. I looked at it. The average GDP growth is close to 9%. So for a country like that, 5% is, really low. It's like low growth for them. So in that respect, I think they really need policies to jumpstart the economy, particularly in certain sectors. One is consumption. So I'll just give you like 4 quick points about what's happening there. We thought they're going to spend a lot, right, after the COVID reopening and all of that. Unfortunately, people got scared. They got scared. First, they were scared because COVID was still going around. Then they got scared because of all the negative sentiment in the country. Okay, so there was so much consumer confidence has been, declining there. And so what people started to do is they started to save more. Right now, they have the highest savings rate that they've had in the last 5 years. So it's not like they don't have the money. They have the money for consumption, but they are not using it. So we need to see some policies where this money comes out of the bank and actually is used to consume goods. The other problem they're having is their local governments have a huge debt burden and interest rates are too high for them. So it's a little bit of a complicated situation, but suffice to say that debt burden needs to be restructured or refinanced in such a way that debt burden can be met by the local government. Otherwise, it's like the local government's going bankrupt. So they can't spend more. As soon as you start spending more in the local governments, you get jobs, you hire people, right? It's always good when there's activity in the country. So overall, the activity in the country is coming down. Youth unemployment is going up. The youth is not employed. And you know that young people need to be employed. You can't just have a really high rate of youth unemployment and expect productivity. So you have low productivity because of high youth unemployment. And then finally, you have the geopolitical situation. They have the property market as well. Everybody knows about the property market. So that's another problem as well. So just before we go into the geopolitical, I just want to talk about the property market very quickly. So their property market is in a situation where people are not buying. And for the longest time, their government said housing is for living, not for speculating. They have pulled that away now. So now they want people to buy houses because people are not buying houses. Again, people are saving, but not investing, not buying houses. And so there's a big, big depression in the property market there. The property companies, who are some of the biggest companies in the world, are on the brink of default on their bonds and on their debt because people are not buying properties. So 4 problems internally in the country. And then you have the 5th problem, which is the geopolitical tension, right? Even today, I saw some news which said that, the US is thinking about not investing in China or not letting investments, people invest in China from the US. So all of these things do matter because it's as much as people don't want to take sides, I think some people do, countries do. And, if the US is not friendly with China, even if people don't support the US, let's say, they just want to be cautious and they'll stay away, right? So what do people do when you see a conflict? Sometimes if you see like two people fighting, you walk away because you just don't want to be part of that fight. You don't know what's going on, you don't know what's happening, and you just think like, you know what, let them resolve it themselves. I'm just going to take a step back. So I think all of these things combined are actually pulling down China's growth much more than we have anticipated. I'm still very cautious on China. I know people have started investing again. We have seen flows in the last 2 weeks. Like if you look at the banks, they show you the fund flows into China. So you'll see the fund flows are increasing. But I think for individuals like us, we should be very, very cautious. I think we should still be careful about the names that we choose, because just put China on a chart. So if you have TradingView, just put China A50 on a chart or put the Hang Seng on a chart. Just, zoom out and look at what's happening. You have 3 days of up, 2 days of down, 3 days, like it's unpredictable. Every 3 to 2 days, you get some news from the government that says we are stimulating the economy. No implementation, just news, right? Just words. And then, so people get like all gung-ho, they buy stuff and all of that. And then 2 days later, they realize, oh no, this is not happening. And then they come, so it's a disaster. And so for now, I think until we can get a good handle about what's going on there internally, and they actually start implementing these policies, I would not think of going in just because they're cheap.
I think that was incredibly insightful. I think cautious is the right word because China has got a trust issue right now. Everything that you just mentioned is certainly true. You look at the opportunities versus the risks. The opportunities are decreasing. It's not 9% growth anymore. Now it's 5.5% growth. Well, those risks seem to be increasing too, right? The relationship with Taiwan, the IP protections. We've certainly seen years ago, everyone was flooding China to do manufacturing, especially in semiconductors, tech industry. And now a lot of that production is actually moving to Southeast Asia, other countries, Taiwan, Vietnam, other places, because between zero COVID and government erratic policies, has scared a lot of manufacturing out of that. And then also biotech, either other industries too. Healthcare, China wanted to completely revitalize its healthcare industry. It's just very interesting to see the lack of trust and how that's impacted not only at the grander scale, but individual company investment in the country. Go ahead, Ayesha. I think you wanted to add something there too, yeah?
No, so you're right, because, even in their own private sector, the government has been unfriendly. For example, with digital transformation, this is yet another reason why youth unemployment is so high, because these youths, they don't want to work in the fields, they don't want to work industrial jobs, they want to work digital, high flying, maybe advertising jobs, or digital jobs, tech jobs. And unfortunately, this industry, and including fintech, by the way, you remember what happened with the Ant IPO. They've all been pushed down. So until and unless they start to be more friendly towards some of these more advanced, industries, I think we're in for some trouble. So there are like 4 or 5 companies that are tech type companies and still trying to get through. But and they're good companies. Like, for example, there's a company, Pinduoduo, maybe I'm pronouncing it wrong, but it's PDD is the ticker symbol. It's a great company. They're doing great stuff. I really like this company, but I'm afraid, because every 2 days there's some kind of policy coming out that stops them from doing what they should be doing or want to do, or to enable them to grow. So at the end of the day, I think it's tough to get a handle on China. If we do think about investing, we need to be cautious. So let's not be all gung-ho.